Hello and welcome to today's relatively brief intraday video, whereby I seek to cast more light on how did Saturday's predictions and this long slide analysis turn out. Be sure to review Saturday's video, which is the immediately preceding one, where I had been going for several minutes over all these bullet points in random order with extra comments on top. So let's move into S&P 500 for today, and this is the 30-minute intraday chart where you can see an unsuccessful attempt to break lower there where the overnight even before Europe woke up lows are. You can as well see the opening bearish gap that I predicted would happen and that it would be closed, and it happened just like on Friday. It happened really fast, but the move is quite muted. We are still fighting at Friday's closing aftermarket highs, aftermarket what represents the futures market. In here in CFDs it's just a usual session continuation, because these are basically about 23 hours a day open. So that's the constellation. We had seen a break of the key resistance for 415. Again, all happened in one day, and tech was dragging its feet. It was one of the entities, one of the weakest sectors today, and it kind of corresponds to the pre-inflation data caution, because CPI is hitting tomorrow. What is therefore obvious is that cyclicals and value did better than tech. However, there are some flies in the ointment. I would have liked to see financials doing much better than neutral on the day, and industrials to not just to cling on their intraday gains, but to slowly extend them, and being only 0.2% positive on the day is kind of weak. Materials are understandably also afraid of the inflation data tomorrow, and you can see it in XLB. Only energy is bucking the trend, as oil had defended the $76 level with ease, and you could have reviewed that in Sunday's article, whether it's in the premium or free sections. Why do I say premium or free? Because the gold one was open, and you had seen me as well today within the premium Telegram channel issue a call, bullish call for gold, as it was starting to come back to life, and boom, in one instant it just added over $8, and right now is struggling, posing as much as S&P 500 is on this chart as well. So we are seeing right now, with the major move of today having played out, quite a consolidation with some downside vulnerability, and that's what I was highlighting when talking these sectoral overviews. Brief snapshot of this chart. Remember how the highs are looking next to each other, and here you see tech starting to and keeping underperforming. It's having trouble even before the early session downswing came at these levels. So I would be cautious about going into the aftermarket. And as well, one more final point to bring up is that the inflation data tomorrow and Wednesday are going to be somewhat a bearish catalyst. Remember that. And these are just a few samples of what is going on within the daily publications that I'm writing for all types of clients, and within the intraday, the smashing intraday channel that we have on Telegram. Thank you very much for listening. Obligatory disclaimer. Fine evening and talk soon again.